So we shall move straight into it, and excuse the typo there, but the Bank of England has cut interest rates for the first time since 2009. So we've had significant news today. The Bank of England, they cut the interest rate for the first time since 2009, said it would buy 60 billion pounds of government debt to ease the blow from Britain's June 23rd vote to leave the European Union. The central bank lowered its main lending rate to record 0.25% from 0.5%. That has had quite a big impact on the markets already. Just within 1 hour following on from that, we've seen gold break out quite significantly. We've also seen silver start to move to the upside as well. The pound is breaking down at the moment, so that has definitely had quite a large impact. I'll move over to gold very shortly. We'll have a look at the chart and how the price is looking right now. Over the course of this week, we did see gold profit taking earlier on Tuesday after we saw gold price hit a 3-week high. So we saw prices breach up to 1,365 US dollars per ounce within about a $10 move, or 100 points away from breaching above the 2-year highs as well. Overall, technical control definitely remains in further of the bulls at the moment, particularly given the fact that the interest rate decision today has been, of course, supportive for gold. Now, why has it been supportive for gold? So a few of the reasons around that. Primarily, the fact that the UK have now gone and reduced interest rates puts America and the Federal Reserve in a difficult position now moving forward in terms of them increasing interest rates too. So that is one of the catalysts that we have seen providing support for the precious metals, especially last week on the FOMC statement, was that the Federal Reserve didn't go ahead with an interest rate increase. They left the interest rates unchanged, and the speculation over this year as to whether the Federal Reserve would go ahead and increase their interest rate later on in the year is now much more unlikely. And with that, we've seen gold start to grind and move to the upside or the back of that. Also, of course, if you hold any investments or you've got savings in the bank, now that the interest rates have been reduced now to 0.25%, it's again much less attractive here to hold your savings in the bank. You would look for markets which are performing well at the moment in order to diversify your capital. And of course, you don't really need to look much further than the commodities, and in particular the precious metals as well. So if we have a look at the moment on the top performers over the course of 2016 so far this year, silver has gained 45% this year. We've seen runaway moves also on platinum, on gold, on palladium too. We've continued to see very strong inflows into those markets. They're the top performers at the moment. We've seen gold right now, it is poised for a potential breakout yet again above the 2016 highs. Really what this tells you is we're seeing continued investment demand in these markets. So this has been just another catalyst for prices to break out higher today. We've got the non-farm payrolls tomorrow as well, and this really is an opportunity at this point we perceive to enter if you don't have positions, particularly on silver at the moment as well. Silver had a corrected pullback over the last couple of days. It's gained 45% in 2016. Okay, commodities have had their best run since 2009. We continue to see significant inflows into these markets.